So I want to go over the foreclosure stages. So the first is when a homeowner is struggling to make a mortgage payment. So everybody who's, you may or may not own a home, but once you get a home, you have a mortgage that you have to pay. And if you stop, you may, for whatever reason, financially, or maybe you had to relocate, or you lost your job, or you're going through a divorce. Unfortunately, in my business, I see a lot of divorces. And sometimes, when I'm dealing with people in divorce, you're really becoming a mediator, in between. Because in order for a short sale to take, in order for them to sell the house, they have to both agree to sell the house. And sometimes one party wants to screw the other party and they don't want to sell. So you have to mediate and try to make everybody happy at the end of the day. And you have to, I don't know if you've ever heard that this business may not be about real estate. It's about solving problems. And that's really what it is, solving divorce problems. So homeowners struggling to make mortgage payment. And then what they go into is they stop making the mortgage payment. And so I want you to understand the difference between pre-foreclosure and the foreclosure. Pre-foreclosure is when they stop making the mortgage payment and then it hits their credit. The bank has not filed a legal lawsuit, but their credit score is hit, saying that they stop making the mortgage payment. And so there's a way for you to get these pre-foreclosure lists. Basically, there are companies out there that take and accumulate, people that are delinquent on their mortgage, and they get these records or information. Now, foreclosure starts when the mortgage lender files a list pendens. I believe it's when they're 3 months late on their mortgage payment. Don't take my word for it, but I don't know everything, but it is 3 months, and I'm not, some banks may not be exactly 3 months, but that's typically when it starts. So 3 months, you're late, the mortgage company will file their list pendens or a lawsuit. So they basically want to start the foreclosure process to get the collateralized property back, because the homeowner borrowed money from the bank, and so the bank wants the money back. So in order to get that money back, they want that property back from the homeowner so they can sell it to get their money back, right? So at that time, the homeowner has options. They can go through loan modification, short sale. They can go through Deed-in-Lieu. There are other options available, but those are kind of what I want to focus on, because those are kind of when people come to me, those are kind of the options that they, are looking into. I don't do loan modifications. I used to a long time ago, but I just like, it's not even worth my time doing that, because when somebody does a loan modification and the 80 to 90% of them end up doing a short sale, so it's like, why even bother? And in more particularly in New Jersey, you're not supposed to take money. Only attorneys can take money if you're trying to modify a loan. All right, so I don't even deal with that. I get paid on these transactions at closing, I don't get any money up front. So loan modification is one area. Short sale is another option. So loan modification, you're basically trying to apply to the bank so that they can try to modify the terms of the mortgage, whether lower interest rate, longer term. In some cases, reduction of principal, rarely. And then short sale. Now, short sale is when a property is underwater, so that you have to subject to lender's approval, because when the property gets sold, it's the money that the bank is going to receive is less than what is owed to them. So the bank is getting shorted. So that's what they call it, a short sale. All right. So, and then a Deed-in-Lieu is basically the homeowner says, and this usually happens in a scenario where the homeowner is like, I don't want to deal with any paperwork. I don't care about this property. Just take the property back. Just give me some money and I'm out of here. And so in exchange for some relocation money from the bank, the homeowner hands over the deed and the keys to the property, and then the property becomes REO, which is real estate owned, another word for bank owned property, right? And as I said, there are other options available, right? So during this process, as when the homeowner has all these options, the property is still in the process of being foreclosed on. And so eventually it will come to that day where the homeowner will be served a notice saying that this property is being sold at share sale, a share auction. And at that time, in New Jersey, you're allowed 2 postponements of up to 4 weeks. So one postponement is 2 weeks, second postponement is another 2 weeks. So it goes to sheriff's sale, and then there's two things that could happen. It could be sold to a person that bids at that auction, or if nobody bids or it doesn't meet certain requirements, then it goes back to the bank and becomes an REO. So basically the bank takes it back, and then the property becomes their bank-owned property. All right, and then that's when basically the homeowner no longer has possession of the property, in terms of they no longer own the property, and then at a certain point the sheriff will come and kick the homeowners out, but that's a whole discussion in itself. All right.